Name's Carpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable where we talk about current market conditions and answer any questions you might have. Renata, can you hear me? Peter, Dario, can you type in inside of the questions box? I just want to make sure you guys can hear me. Thank you, Dario. All right. Thumbs up also work. Andre, welcome back. So for those of you who are new, I see some new names. My brief bio, I was Executive Vice President, Head of Technology at Options Express and several other broker-dealers here in Chicago, work at hedge funds, helping them build infrastructure and technology to run multi-asset hedge funds, like Pick 6. When the company went public, some of the companies that I worked with as a first employee went public, and I've been managing and trading my own money for close to 25 years now. Started Tradespoon 14 years ago, so it's been a long time. Basically developing models. We have a team of strong financial engineers with PhD in economics and physics that are building models using latest advances in AI, and then I use these AI models to manage my own portfolio. So every day we have live trading room. Keith Harwood joined me about 2 years ago. So Keith background, he started as a market maker. So he's expert in options trading, futures trading, analytics, and together we manage, I think it's a great team, over probably close to 40, 50 years of live experience in the markets. So I've seen a lot. And personally, I love teaching and building models, so that I've been doing that for many years. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. If this is the first time you guys on the broadcast, Dario, RJ, I'm not sure if I only see Tariq. I think Tariq is existing client, but if this is your first broadcast, say hi inside of the questions. And very important to read these disclosures, right? Optionscreen.com, so you understand the risk and suitability of trading stock options, and that I'm not a financial advisor. I'm here just to show you what I do with my own money using the technology I built for general education information purposes only. And we do have a marketing relationship with Vanguard. So I'm going to give you some of the slides. So just keep in mind that there is I have a financial interest in Vanguard and also marketing relationship. So trading psychology is important, right? Before we get into trading psychology, let's talk about current market conditions, right? Kind of a roller coaster. I mean, a lot of issues. I mean, you can ask Grok. Let's ask Grok. What market news in the past 5 trading sessions that impacted stock market? Super Grok, I like to use it. It's helpful. Past 5 trading sessions, so significant volatility, notable sell-off in major US indexes, driven market by tech sector rout. Concerns over AI-related spending and disruption, weakening labor market. We saw that yesterday, right? Was the initial claims and the layoffs data, and a spillover into cryptocurrency and precious metals, right? High volatility in illiquid names, illiquid like silver, 30-40% move drops, cryptocurrency 50% drop from all-time high. Tech and AI jitters dominated, right? All major fueled by AI capex, right? We've seen Amazon, right, yesterday, Meta, Microsoft, all spending $200 billion on AI infrastructure. This led to sharp decline in software stocks, right? Was the idea was the new advances from whether it's Grok or cloud, the idea that software, you don't need less developers, and you don't need to buy expensive software, right? People are going to write their own softwares, and there'll be a lot of new companies that can write these software much faster. So you have stocks like CRM, right? CRM or Adobe, right? Kind of a CRM, how much is it down? 30%, right? In bear market territory. It's not just CRM, Microsoft, even though it's not just a software company, but derives a lot of its revenue from software, from highs to lows. 30% down, right? 30% down. Significant kind of in bear market territory for some of these technology names like Tesla, Microsoft, um, Palantir, etc., etc. So labor market weakness, right? Recent data showed a sharp drop in U.S. job openings, rise in layoffs, highest January level in 17 years per some surveys, right? And now the downbeat indicators, continuing risk off sentiment and bond yield movements, right? We have nomination of new Fed chair, Warsh, that's more traditionally has been hawkish. He turned dovish, probably to get nominated, but traditionally against the inflation and against large federal government balance sheet, right? So that creates uncertainty in the market, right? And you have a curve steepening, yield curve steepening. Broader market performance, negative territory. So S&P entered negative territory below 50-day moving average, right? I think it's right at the 50-day moving average now. Nasdaq composite heavy, a lot of names are in bear market territory. Dow Jones pulled back, overall 3 days of losses. Okay, spillover effect. Bitcoin plunged significantly, right? 50% retracement from all-time highs. Shift from, okay, and then we can just say, where do you think SPX will close by end of March? And then while it's thinking, let's see, can I switch? It pauses. Let's see. 2930. If I go here, 33. Okay, so let's see what our models say. Forecast. So 10-day predictions using our stock forecast toolbox model actually turning positive. It sees that the stock market is oversold, potentially reaching 670, 675. We were at that level after Amazon earnings in the post-market session. Right, I was looking at Amazon. We were as low as 196. If you look at QQQ, after Amazon announced its earnings, we were as low as 587, right? We were as low as 587. So very sharp, almost 2% top to bottom reversal in the QQQ, right? From 590, basically retesting the lows from November and December. So retested November, December lows, right? October lows, I mean, end of September lows, right? So and bouncing back, right? So very sharp reversal from that November, October lows. So model has detected that yesterday, right? It didn't know about Amazon earnings. It's not trade on Amazon earnings or anything like that, but based on Spider's action, it sees, okay, 575 is your support, and potentially retracing all the way to all-time highs by end of February, beginning of March. If you zoom out to 6 months, right? If you zoom out and switch to 6 months prediction, right, which posted on the first of every month, it gets posted. It doesn't see a lot of momentum breaking above 700. And today, some short-term, medium-term is broken, so I think it's going to have a hard time breaking above 700 unless there is some positive news, right? Lower, taxes for corporations, individuals, or lower capital requirements for banks, right? Something that stimulates the economy. and will vote and win votes from the right with midterm election from uh, to get more votes. So uh, to address affordability issues. On the downside, it's C620, right? That seems very far away from now, and looks like QQQ is rebounding, but still, we're not out of the woods, and we have unemployment data next week, right? We have unemployment data next week. It was supposed to be today, but we had a partial government shutdown, and now the employment data is pushed to Wednesday, and then CPI data, right? So that will be, the expectation employment rate is 4.4, right? But we have some survey data that basically contradicts that interest rate. So if unemployment jumps to, let's say, 4.7, 4.8, because we had recent sharp drop in US openings and rising layoffs, highest levels since some of the surveys. And now we don't even know which economic data the new Fed chair is going to look at to determine the path of interest rates, right? He might start looking at the rise in layoffs data, where right now maybe it's not factored into the interest rate decision, but nonetheless, that could spill over. At some point, it can reach a tipping point where the unemployment rate that the Fed does follow, FOMC committee does follow, that could spill into the market. So we're not out of the woods. So 615, 620, I think is aggressive, but 650, right, on SPY. All right, we trading right at the 50-day moving average. We broke briefly below 100-day moving average. If this is a false reversal, right? If this is just a relief rally and there is another leg, usually there is leg A, B, and C, right? You have wave A, we definitely have wave B, right? If at 690 we have wave C, right? Then, depending on what the news are, we could take out the December lows, right? And we can, just like QQQ, retest the 50-day moving average, which would be at 650, right? That A, B, C, D, E kind of wave. Which in sharp market sell-off is a pretty common pattern. A, B, C, D, and E. All right, so that's a question mark. So, one day doesn't set the trend, but, we'll see where we're going to close today. Any questions? All right. What else? All right, so let's go back to Greg. Okay, based on recent market volatility in market by tech sector rotation and AI spending concerns and softening labor data, the CP has been under pressure, showing signs of stabilization to date, trading at 68.80 as midday February 6. Looking ahead of the end of March 26, I expect the index close modestly higher at the range of 71 to 7,300. Right, so implying 4 to 5% rally. This view assumes a continuation of the broader bullish consensus driven by anticipated federal rate cuts, potentially starting in March. Robust corporate earnings growth in 10 to 15% range of the year. It sustained AI-driven productivity gains offset the near-term economic headwinds. Several Wall Street firms projected double-digit annual gains on S&P 26 with year-end targeting cluster 75 to 81, implying 11-18% year from the year-end. For the shorter term, through Q1, this could translate in 3-6 advance from the current prices, supported by healthy economic growth and policy uncertainty. The risk likely persistent inflation or sharper labor slowdown could cap the gains, right? So if we do have a sharper labor slowdown next week by the data, then contrarian views exist, with some models forecasting a pullback of around 6,500 by March amid overvalued concerns. But I see these as less likely given the momentum in mega cap technology. Overall, the volatility may persist in coming weeks. In past, this resistance appears upward, bearing major exogenous events. I mean, I don't know if I could say that better. But I agree with that assessment, right? I agree with that assessment. The model, short term, long term doesn't, basically does agree that at least by March we can get to that 700, 710. I personally would not be surprised. But the risk to the downside does persist, assuming that unemployment is going to rise or some, macro or geopolitical risks. So that's growth. This is our model. And if you look at gamma for SPX, the flip point is again 6,900, right? So 6,968 is very important level. We are trading right at that level, right? So we need to stay for the bulls to declare a victory, not the victory, but to declare that we are close to the bottom, right? If not the bottom, right? Usually you don't want to call the bottom, but you want to say, well, we're probably close to the bottom. We need the main overhead resistance is again at 6,900. We talked about this level for quite some time, for months, right? We briefly traded above this level, right? Triple top, we're not able to break out through 7,000, right? That's resistance number 2, 7,000 level, right? A lot of position in February, March is going to have hard time breaking through that level. But first things first is the 6,900, which also has a lot of positioning, right? Is the 6,900. So to say that the sell-off is done, right? One day, based on the price action in one day, you cannot say that. But if today we close, let's say above 50-day, or even at these levels, anywhere above 6,800, and then we have a follow through into the next week on the CPI and unemployment data, and we are staying above 6,900, then I would say, okay, the bottom is probably either close or set, and it makes sense to maybe start adding to your bullish positions. So that's SPX, and this is the gamma, right? If you look just at the implied volatility, right? If I just select, okay, what's the based on supply and demand for SPX, March 20th, right? What's the expected price range? Kind of confirms on the downside, 6,500, right? That basically, if there is an exogenous impact, 6,500. Our model sees 6,200, but 6,500 would be based on the current volatility. You should not be surprised to see 6,500, and then Grok, same kind of range, 7,100. Grok, I think, is using implied volatility to determine the range. But since the long-term trends are still intact, it has a bullish bias, just like I am. So based on that, how do we help on yellow tunnel? So we've already seen stock forecast toolbox. This helps me kind of decide long-term, short-term, what the momentum is, right? Okay, it's useful to see that Spider's model is turning bullish, and today is a confirmation that the model is actually correct. We do have signals. So you have active trader and weekly trader, two list of models that I use to make decisions what to trade. So today it has signal Hasbro, consumer staples have been in strong uptrend. Weekly trader we had that gets updated. Active trader gets updated every day. Weekly trader gets updated every week. IBM, right? So IBM is a valid signal. Energy, DVN continues to grind higher, and utilities, Nextera. All right, so utilities continue to lead the market. Energy names continue to lead the market. Consumer staples. Some of the tech stocks like IBM, but obviously it had a sharp sell-off. But still, that the trend is probably intact in some of these names. And then I'm using these signals to actually trade. So today, USB was another signal. So I opened a position in USB. Regional bank, I closed the position in Morgan Stanley using spreads. Closed the hedge, right? I think market is oversold. Probably getting close, right? So I took profit on the hedge for QQQ, and I added to my JEPQ position, which pays me a dividend. So one of the largest positions I have is JEPQ. Closed Amazon, so some of the trades are earnings. So you can see a combination of stock trades, individual option trades. I closed Amazon iron condor, right? Taking advantage of the volatility in the market. So I sold the Amazon contract and added to Meta position, right? Added to my Meta position. So combination of stock and option trades, you can see all my orders, you can see all my positions. There's a morning bell, closing bell. Keith and I manage these live trading room. I encourage you, if you haven't talked to Keith, you know, first session is free. He has a lot of experience with option trading, coaching and mentoring traders, professional traders and new traders. So the first 25 minutes is free. I took some of these coaching sessions throughout my career, and they range anywhere from $500 to $1,000, an hour. So 25 minutes you get free with Keith. I encourage you to schedule a consultation. He can help you with building a trading plan or give you some guidelines. If you need longer term commitment, he can do one-on-one coaching as well. But this is an opportunity that I would take. Right, so I'll put this here. Any questions? And then what else? So you have recordings. If you can't participate live, every session gets recorded, so you can watch it when you have time. Again, you can look at my orders and positions. You can get Discord alert or SMS alert. We talked about stock forecast toolbox, active trader, weekly trader, signals. Like today, Hasbro. It gives you support and resistance level. For short-term trading, it looks for 1% gain, right? If you enter at 94.25, 1% move would be 90 cents. So that's why you see these levels. And the idea is to always break down your position into two, right? So I encourage, if you're in live trading room, basically maximum loss of 2.5% per position, only 4 positions. If you're new to trading, I would start with that and break that into 2 positions, right? So maybe 1% of your portfolio. Average portfolio is $10,000. Maybe you're risking $100 at each of these levels. And same applies for weekly power trader. The only difference, it's instead of 1%, it's 2.5%. So here's $6, 2.5%. For IBM, right? If you suggest the price 296, okay, it's at 296. If you think IBM is going to continue its rebound, then that would be the setup, right? And if you want to leverage, same signal, you can use options. It's just except buying 100 shares of IBM at 296, you buy 290 call at $6.30. You can do it. I mean, this week probably doesn't make sense, but then at this point, this was published on Monday. At this point, you would buy either weekly options or monthly options. Just depend on your style of trading. So those are the signals, right? Active trader, weekly, monthly trader is similar. If you want to follow my portfolio, it's Elite Circle. I encourage you to take a look. If you just want option spreads, then Premium Portfolio. If you want to spread portfolio, if you just want to follow my signals, only Shadow Portfolio. But these are just different portfolios that you can follow. If you already have a trading plan, you're disciplined trader with a solid trading plan, these are the most popular products we have, right? Stock Forecast Toolbox to help you navigate and find support, resistance, and trends. And then these are AI signals vetted by Keith and I. So I encourage you to do that. Any questions? I haven't seen a single question today. I hope you guys can hear me. Let me see. Is my sound okay? I hope you guys heard all of this. Annette. Yes. So telecommunication in general, thank you for that question. Telecommunication in general has been in strong uptrend. All right, so transportation continues to make new high. Telecommunication continues to make high. We traded Cisco. I closed the Cisco, but it's close to all-time high, continues to grind higher, right? And ANET, Arista. Arista had a sharp pullback. Computer peripherals. So it's going into the earnings, right? It's below 50, below 200. I mean, it's the same analysis, right? Down 30% from highs to lows. So it trades in the bear territory, right? It's 50 across to 100-day moving average. So very bearish setup. Obviously, the earnings will determine the next move. But for now, this is a weak stock. I mean, I added to JEPQ because I think the bottom has reached, but you are taking a risk of an individual name. But you can say, listen, there's little room to the downside, a lot of room to the upside. I kind of had that same setup with Pelletier, right? I was down 1%, right? Somewhere in here, I added, another half of the position here. I saw the support, and despite better than expected earnings rally and then complete sell-off. So during market sell-offs, tide lifts all boats, tide sinks all boats, right? Very high correlation. So if QQQ and JEPQ is going to continue going higher, most likely Pelletier is going to reverse its price action, and Arista too, right? Earnings probably not going to make too much of a difference unless they're really bad, right? So that would be BJ. Welcome back. Sorry, you joined late. So I went with Cisco or STX have been, like, if you look at the computer peripherals, then STX obviously stands out, right? It's still at all-time high, consolidating. SanDisk, right? All-time high, consolidating. I'm a momentum trader, right? So I would follow the momentum. If you obviously think that there'll be a reversal where underperformance are going to outperform, and a lot of people think that momentum stocks are going to now consolidate or retrace, and then the beat up stocks like Adobe and Pelletier will rally. I mean, it is possible, right? But for now, the clear winners, I think, small caps, right? If just in general, the trend is small caps. Value stocks continue to make higher, etc., etc. All right, guys. Sorry, that's all I have for today. Thank you very much, and have a great day. And have a great weekend. Don't forget to schedule a meeting with Keith. Thank you, guys, and have a great weekend.